Hello traders, Gary Wagner here. It is 12:25 in Honolulu, 6:25 in New York on Tuesday, 4th day of October 2022, and this is the daily report for gold and silver. The bottom in gold that began 5 trading days ago last Wednesday, and the top in the dollar that occurred at the same time started a correction in the dollar and a rally in gold that continue to this day. Gold did gain about $32.70 at the time we wrote our opening letter and was tracking at $1734.70. Currently, we have gold at $1734.20. The dollar continues to fall and fall hard. Today, giving up about 1.5%, 1.42% to be exact, with the dollar index now at 110.065. And lastly, silver had solid gains today of about 2% and is currently fixed at $21.12. If you recall from yesterday's show, we continued on the theme that began last week using both Henkin Ashi and 3-line break charts, which correctly identified key reversals in both gold and the dollar, a key pivot point that began when the dollar reached a high on Wednesday and gold traded to a low of $1,622. We also talked about our strategy was that effectively we wanted to see gold trade and close above 1680 before entering an official buy trigger or signal in gold. However, what occurred yesterday was the market opened below that at about $1,670 and barreled through that like a hot knife through butter, actually closing substantially higher, I believe at about 1708. I was hoping that we might see some sort of dip today so we could enter the market. However, today we had follow through in which gold gained another almost 2%, with gold currently trading at $1,734.20. So my comments yesterday were that we're now going to move to our standard tools to look at support and resistance levels, potential levels, I should say, in the dollar as well as gold, so we can ascertain where we might find a dip and enter from the long side. Let's start with where I think gold could go long term. I believe it could go as high as 1850 and 1825, with a minimum on this rally just shy of 1800 at $1,796.70. And those 3 price points are based on, first, the 50% retracement level. That comes at 1850. It's a long data set from the record high this year at 2078 to the low of Wednesday at 1622. The second possibility is that gold will go to $1,825, and that is simply based upon this most recent high. And then below that is the 38.2% retracement level at $1796.70. Now, while I believe that we will see gold go to one of those 3 price points, I also believe that it will not be a straight linear line up. Although gold is currently trading at $1,733.90, it doesn't mean that after we've seen such a strong $100 gain over 5 trading days, we won't see some sort of a pullback. I don't believe we'll have an opportunity to buy at 1680 again, but I would be very comfortable entering the market at about 1705 or better, 1700 to 1705, because if we did see the market dip to those levels between 1700 and 1705, it would allow us to enter from the long side, putting a stop below 1700 with the potential to reach 1796 to 1850. It would have an excellent risk-reward ratio. And that's what I'm hoping we'll see. At the same time, we need to look at the dollar very closely because the dollar and gold are entwined with a negative correlation, and so that if we see the dollar find potential support, that would be a logical area to see gold find resistance. And just as gold is very close to that first level of potential resistance, just above it, I should say, the dollar is right at the first level of potential support. That comes in at about 110. It is the 23.6% fib retracement. The data set we're using here begins in January, when the dollar index was at approximately 94.68, up to the record high of Wednesday, which came in above 114, 114.70. Below that is the 38.2% fib retracement at 107. But as I said, I'm hoping to see maybe a little spike higher over the next day or so in the dollar index that would correspond to a small spike lower in gold, hopefully going to our entry price. Of course, we will send out a trade alert via SMS, text message, as well as email. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.